Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so, yeah, I just wanted to do a quick little follow up on the chart after earnings did take place, I believe Monday after the close. So that would be on August 11th. And I am recording this during market hours on Wednesday, August 13th. So yeah, just wanted to give my perspective. And I have to say, I was considering doing a video over the weekend before earnings just to give my perspective, but I was a little bit reluctant because I feel like, we always get surprises with AMC, but there are a few things that I do think look good about the chart and some things that we need to be paying attention to. And so one of the things that made me want to do a video on it, thinking that AMC was looking pretty good, was on Friday, so August 8th. We saw this nice big green candle here. It looks like it went up 4.27% on the day, but then it closed at $2.93. And so that's pretty important in my view because, if we do look at this, taking a little bit of a step back, I've got this uptrend here. We did close above that, so that looks good, but we closed below $3 a share. So if I just pull up the max pain here from Unusual Whales on AMC, we can see that for the next couple weeks, so upcoming Friday the 15th and the following one the 22nd, $3 max pain, then we come down to $2.50. So max pain's, still above us, although right now we are trading above $3, so I think that's good, but there might be some, gravity pulling us back down. But then if we look over here, so let's see, Friday, that was the 8th. Max pain was $3, as you can see there, but we did close, like I said, at $2.93. So closing below max pain was not such a good look there right before earnings. And this also, just thinking about this psychologically, let's say I'm long AMC, which I am. And we've had all of these red candles coming down. We've got earnings coming up, so I'm excited about that. I want the stock price to go up. And then we see this big green candle. And so I am thinking, oh, this is a change in trend. This is going to launch. I'm excited about it. And then it does gap up, but then it pulls back, closes lower. And so I feel like this was kind of like a fake out signal that this is bleeding, starts to go up, but then we get rugged, after earnings. If we bought up here at 324, it's now trading lower, currently around 307. And so, yeah, I think this is kind of a fake out signal. We needed to see it close above $3. And also, if we look at some of the highs from over here, like just the high from Tuesday, August 5th, we can see that high was at $2.93. We closed at that level, but not above. So like all of these highs that we're seeing over here, we're not closing above them. We're not reclaiming them. And so that was kind of a signal that any big move to the upside might be seeing a retracement. And so that's effectively what we've seen. Although we are, above 293 now. So, there is that. Some other things that do stand out to me, and actually before I get on to that, is something that I will forget to mention, so I want to do it now, but we can see this blue line here that is the 200-day simple moving average. As you can see over here, the end of May, we did fake out break above it, and then over here in July, we did test it, but got rejected. And so the reason why I want to be mentioning that is really just referring to this post from Colin Gladman. I'll include a link to this post in the description of the video, but he is somebody who I think is great to follow because he's, unbiased. He looks at the chart, he gives his perspective. And so his perspective here on AMC is that, there's really nothing until we start to see us really, closing and holding closes above that 200-day moving average, which we have not yet. So whether he's bearish or, bullish or neutral, I would say he's probably falling into the more neutral camp. And, we're not really bearish until we start really breaking down. We're not really bullish until we're above that 200-day simple moving average. And so one thing that I did mention that I am looking at, and I had mentioned it in the last video, I think I went over this chart here, is this green line here. So that's at $2.79. So that was the low from July 1st, low of 279. In that video, I believe I talked about, that level. We want to be holding it. However, on August 6th, we hit a low of $2.78. So anybody, let's say, had a stop loss at 279, that stop loss got swept. Those people got pushed out of their position, and then we see it go higher. And so I feel like this might be a sweep of the lows and kind of like a fake out breakdown. Just like over here, we saw a fake out breakout, and then we got rugged. So like from that breakout, just from that moving average, saw a downside move, 27%, nearly 30%. And yes, we got rejected there. And so I feel like this is kind of a sweep not only of the lows there, but also this trend line. Let's see. I don't have that locked into place, so it is kind of a casual trend line, but you can see it's based on just the approximate low from April 4th, which was at a price of, let's see, $2.45. And then also approximately the low from April 30th, that being at $2.53. So we see that trend line did respect it over here when we hit that low of 279. But then we fake out, in my view, broke below that level. So what I want to see moving forward, of course, just like what Colin's saying, I want to see us reclaim and hold above the 200-day simple moving average. I think that's really important. That would be kind of like shifting into bullish territory. Right now, I feel like when we're between the range of that 200-day moving average, which by the way is currently at $3.43, if we're below that and above 279, I think it's kind of like neutral territory. But if we really start to hang out below this uptrend, then I think it could start to get more bearish. So I would be paying attention to that. But then some other things looking at the chart that maybe suggest that we're kind of seeing a change in sentiment or a trend change is that we have seen, higher volume over here corresponding with the fake out breakout here. Then we saw lower volume, but still elevated at the retest of that simple 200-day simple moving average. And then now we're not up at that simple moving average, the 200-day, not even at this yellow line here at $3.33, just having fun with that being repeating numbers. But we did see, an increase in the volume here. So there's a little bit of divergence there. And I'm actually wondering, is that bullish or bearish divergence? We do see lower highs in the price, whereas we see now a higher high in the volume. I would actually argue that that might be bearish divergence, a type of bearish divergence, although that's not necessarily related to the volume. That would be related to the RSI. We still do see lower highs in the RSI corresponding with lower highs in the stock price. So, I don't really think that that's, necessarily a bearish signal, and I would view it more as, this is kind of a breakout. There's more volume, there's more interest, maybe there's a change in trend, but really we need to start seeing, like I said, like Colin has said, we need to start seeing those closes above the 200-day simple moving average. And then if we look at it, the bottom side, we can see, of course we did put lower lows in the stock price, but also with the RSI. So like on July 1st, the RSI, it's behind Ed's head, but on July 1st, the number there for the RSI is 3705, whereas over here, we put in, 3596. So with the lower lows in stock price, we've put in lower lows with the RSI. So there's no, unfortunately, bullish divergence there. So what I am looking at, for me personally, I'm really just looking at, do we now hold this horizontal line, that green line there at 279? Do we test it again? If we start to put in lower lows, like, over here, higher lows, we're putting in higher lows, that's a good trend. Then we see a break of that trend, putting in a lower low. Is that a fake out? That would be great. That would mean that this was like a dip buying opportunity. But then if we start to break below 279, then that's really kind of like a confirmation, confirming the break in trend with now not just putting one lower low in, but then multiple lower lows. It's likely going back to like the 250 range. But if we can maintain above this uptrend, which actually maybe I'll do a Fibonacci retracement here, just kind of on the smaller scale to see, maybe the 618 corresponds with around 293, and that's also the gap here. But actually, very interesting. What was the low on yesterday? So August 12th, the low is 293. So this gap right here has been filled. So I think that's, a very good thing there. Also, a little bit of a gap that was formed here, but that was filled the following day. But let's see, over here, August 6th, the close was at 278. And then the following day, the low was 278. So there are no gaps right here in the immediate future. So I do think that is good. There's nothing, kind of pulling us back. Maybe we are free to run. But yeah, so 278. And then the high over here was, let's see, 326. So I'm just going to do this. Actually, I'm going to extend it so it intersects with that trend line. And so we can see, like I was saying, I feel pretty good about that because, I was just eyeing it. The 618, like I was saying, does kind of intersect with that uptrend, and that is around $2.96. So maybe we see a pullback to that. If we do start to head back to the 786, that's around 288. That might get me a little bit concerned. Although, if we're still putting in higher lows, if we're maintaining 278 now as the low, we're not going lower than that, then I think there might be a chance of us to reclaim the 200-day simple moving average. If we start to reclaim the 200-day simple moving average, then, we really just need to see us holding above it. Like over here, this is, when I lost a lot of conviction in AMC because we closed on Thursday above above $5, hit a high of 556, but closed above 520 when max pain was, I believe, 450 for the next day, the following Friday. And we got rugged. We got with the announcement of dilution, closed at 473. And actually, since I had just pulled it up, we can scroll back in time. What was that date? Actually, don't want to get ahead of myself. So that would have been December 6th. Let's look at the max pain from December 6th. I guess December 19th. This is going into the future. I want to look into the past. Historic max pain. So let's see over here. Let's just check that out. So the 6th. Max pain was 5, and we closed below it. We kind of got rugged. Our CEO, unfortunately, kind of rugged us by announcing dilution pre-market on Friday, December 6th, when we were at the time trading above max pain, and then we closed below it. So that was not good for us. Change in my sentiment. I lost a lot of conviction, and then following that, price has come down quite a bit. From above 5 to being now above 3. Hopefully, we can really start to break out. Oh, and just kind of a side note that I will end on. Unity software, I don't know if you guys are paying attention to it. That has kind of been ripping. That has been looking great. I think that might continue. And I am wondering if maybe profits from that or maybe just the flow might go from there into GameStop, which might then go into AMC. So I think that, we've been around 3 for a while. My sentiment is not so great. Maybe I've posted some bearish things or just, some bearish comments. And, I've just lost a lot of conviction. That's the reality of it. I think that might be a signal, that we might be bottoming or have bottomed. And that we might be breaking out soon. When we lose all conviction, when we lose all faith and hope, we say, screw it, I'm just going to sell, I'm just going to GTFO, and then it rips faces off to the upside. So I think that we might be seeing, a test of that 200-day moving average maybe the next month or so. So keep your chins up. I'm going to try to do the same, but also I'm not getting ahead of myself. I want to see us holding above 279. I don't want to see us going below 278. And, really ideally, if we do get a pullback, I would like it to be just, wicks below $2.96 or $3, just wicks below, but then closing above. But with that being said, I should, note that that max pain for the end of August 29th is $2.50. Or if we're closing well above for the month, well above 250, maybe we start to see a gamma ramp or gamma squeeze, things start to go higher. But maybe 250 acts as a magnet that pulls us down. And with that being said, maybe we do start to break and put in lower lows. And this is not a fake out. This is a change in trend. And this is going to be going down more. So keep that in mind. 279. Important level in my view, but ideally we are maintaining close as above $3, and we want to see a reclaim closes above the 200-day simple moving average, which is currently right around 343. So downside risk, I feel like, is 250. We start to get there. It's probably going lower. Upside that we want to reclaim about 350. So just keep those numbers in mind, and all of that. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more periodic updates on AMC and other stocks like this. Thanks a lot. Hope you guys have a great hump day, and I'll see you in the next one. Take care.